Hi guys, welcome to the Saving Money Show with me, your host Sean. Today we're talking about UK value stocks, but before we start, I'm going to remind you about a company, Burgundy Technology Acquisition Corp. If you didn't catch it in my previous video, it's rumoured, and remember it is just a rumour, to be merging with REE, the next generation EV platform, and from Israeli. A lot of good stuff's coming out of Israeli at the moment, tech wise, and I suggest you look at the website. It really does look good. Anyway, there's Psth. Now, it has a PE ratio of 13 and a market cap of 433 million. I can't do a review of every one, but I can only tell you that Psth is a recruitment brand focusing on the STEM industries. Now, I think when you look at Upwork and Fiverr and how they've grown recently, I think this will do well. We have, I'm going to butcher this name, sorry, Quidco, and sorry, it's on the New York Stock Exchange, this one. It shouldn't be in here. That was one of my penny stocks to look at. I'm still doing my research on that. I apologise that got made its way in there. This is the one, Phoenix Group Holdings. Now, in case you don't know it, it's an insurance arm, and it holds a number of insurance brands you would know of, such as Sun Life and like P ratio of 9.66, which isn't exactly cheap for insurance companies when you consider Legal and General and the like. But when you consider Legal and General have a dividend cover of 0.86, this one has a dividend cover of 1.8 when it has a 6.58% dividend, which makes it a lot better. And we have Stock Spirits, who I've spoken about before. Now, it's number 2 in vodka in Europe. The reason I went into Stock Spirits is because of Brexit and the uncertainty. The fact is, they have a head office in London, but they have a brewery in Poland and another one elsewhere in Europe. So if tariffs had come in, they wouldn't have been hit with tariffs for sending across Europe. Their dividend, they have a 3% dividend. They go ex-dividend on the 28th of January, so you still have time to pick that up. And we have Impact Group. I'm sorry I'm rushing through this. Now, Motley Fool spoke about it. I didn't even know he'd spoken about it when I looked into it. Now, Impact Group, they reckon it'll rocket by 48% this year. I reckon it could do a bit better, but that leaves it on forward price to earnings growth of 0.3. You know, it creates production lines that are like super fast, and it packages the products. We all hear about logistics, final mile delivery, which are massive things, but you know, then it's someone's got to package them, and Now with COVID, they are going into automation a lot more, and I just think that it's a good one to get into, and I haven't pulled the trigger yet, but I am looking into it. I'm doing my research now. Integrafin Holdings is another one. It has a 1.5% dividend, which we have missed, but I do think it's undervalued. BAE Systems. Full disclosure, I do own some BAE. They have picked up some massive contracts recently, 3.8% dividend, and a PE ratio of 13 for a defence company. Standard Charter PLC. You can see it's been on a downward trend all year. It has a 21.7 P ratio and earnings per share of 23. I do think this will do well. It's only just started its recovery, and I do think it's something that will do well. Now we move into the American side of value stocks. We have QFIN, 360 Digitech. I'm sorry, I am rushing, I know. You may recognise some of these from previous videos. Netgear, again, a few of them are tech, but Janus Henderson Group, and that's a 4.21% dividend. And you'll see Lennar Corporation, and it's a 1.31% dividend. Train Insurance Group, and you see $712 million company. Franklin Resources, ticker symbol BEN, and you'll see its P ratio is 16.64 and a dividend of 4.22%. Hewlett Packard Energy. Now, I mentioned this before because it hasn't come all the way back. It's one of these that you just buy and keep because it's 3.95% dividend. It's not like an Apple buy and keep. You have to keep your eye on it, but it's trading at 29% discount, and they are changing with the times. If they had kept with the old style, it wouldn't be worth it, but they are changing, and it should improve the company, and it should be worth an investment now. The Allstate, 1.97% dividend, 7.63 PE ratio. Hibbett Sports. Now you have 16 PE ratio, and Dick's Sporting Goods, just 1.86% dividend, 15.46 PE ratio. First Hawaiian, I've spoke about that in my banks, 4.04% dividend, PE ratio is 17. Cafe General Banco, and that's a 3.39% dividend and 12 PE ratio. You have Citro SA, and that is a 17.5 PE ratio. Manpower Group, and that's a 2.47% dividend. Boys Cascade, and that's 11.91%. Sorry, 11.91 PE ratio and just under 1% dividend. The UK REIT I've spoken about before, it's custodian REIT. It has a net asset value of over £1. It's currently 88p a share, and they have companies like Royal Mail and those sort of companies who are staple long-term residents, so no issues with that there. Anyway, I hope you enjoyed that. If any of these you want me to do a further look into, let me know.